Okay, if today we're going to be taking your questions and asking Rick himself. If you're watching on YouTube, X, or any other outlet, we'll be pulling questions from the Rural Classroom Plus students. So head over there using the links down below or go to the ruralclassroom.com. Rick, how are you, sir? Good to see you.
I'm fine. Nice to be here with you.
Good to be here with you as well, sir. All righty. Do you have any opening macro thoughts? What's on your mind today?
A couple notes I'd like to make before we get into what people are really interested in, which is the answer to their questions. The first is that I would note that as we suggested for a long time, frankly, in these sessions, the bull market in precious metals is unfolding in a very typical fashion. We have noted for years that it begins with gold itself. When gold establishes the momentum and when producer margins begin to benefit from gold prices, which increase faster than the cost of producing it, that leadership changes from gold itself to the best producers, and then moves on down the ladder, which is exactly what we're seeing. I'm struck, first of all, by the amount of good work being done in the exploration sector. My suspicion is that the people who are left after a fairly long bull market are pretty competent people, and they had a long bad market to acquire or consolidate properties. And the exploration results that are getting done relative to the exploration spend is very impressive to me. I note too that this good work is not going unnoticed. The financings that I have participated in or attempted to participate in, I would suggest have offered terms that are, let's say, more favorable to the issuer, to the check writer. And in addition to that, they are uniformly oversubscribed. A recent issue that I participated in, the issuer went out to raise $100 million and stopped taking soft circles at $200 million. In other words, they were more than 2-to-1 oversubscribed. This is not an industry. People just need to understand that is capital short if you are delivering. That's the good news. The bad news is that the retail market has once again become very narrative oriented. I'm seeing an incredible rise in online stock promotion where there's no data given. It's all narrative, it's all adjectives. And these stocks are doing fairly well. And any counter to these are also narrative, which is to say that the online discussion that's taking place, let's just say politely, is not the kind of discussion that I would like to see taking place at the Rural Classroom. I notice not much mention made of value, not much mention made of success or data, a lot of mention being made of the gold price or something else. So it's very careful. It's very important that at any stage in the market, bull market or bear market, that you check your narrative, that you forget about that. Remember that money is always made on the delta between price and value. Price information is useless if you don't have an opinion as to value. The value can be predictive. You can say if this happens and this happens and this happens 3 years out, that the value of this should be X. That's fine if you monitor those preconditions. But to go into a deal with no sense of the delta between price and value is simply stupid. Most of the people who are entering this market, I would suggest, are going to learn this the hard way. Some of them will stick around for the next cycle, but it's too bad if they happen to waste this one. That's my rant for today, Steve.
Okay, so this bull market is playing out to a T, like you'd expect. Gold moved first, the majors are coming after that, and you expect that the mid tiers and the juniors will be soon to follow. But you're also throwing out a bit of caution in that retail sentiment is looking exuberant, and usually when sentiment is so high, that warrants a little caution.
The value's there, but the value's concentrated on 5 to 10% of the listings. And most of the people who seem to be playing the game are not, I would say, sufficiently schooled to segregate between the good, the bad, and the ugly. Good stocks are certainly moving as money crowds into those, but some very, very, very bad stocks are moving too because they're better at mining investors than they would be at mining gold.
Okay. All righty. I've got a quick thing here that I want to share my screen. And you alluded to this before. And okay, so this chart right here, just a sanity check, you can see the yellow, blue, and red line chart.
Yes, sir.
Okay. All right. So the yellow here is the yield of the 10-year treasury.
Right.
And the blue here is the official CPI.
Right.
And the red is the ShadowStats. So I had John Williams on the show, and he was nice enough to share with me his his data. And I wasn't smart enough to figure out how to do this, but fellow classmate Joan was, and she was able to plot this on the chart, and then I overlaid it with the yield of the 10-year treasury. So I remember we were talking about this, and you were saying that somewhere in between, the CPI and the shadow stats number is probably ballpark correct. What can we learn or gain from this chart here?
I think that chart's extremely telling. I have maintained for years that although there are a lot of variables in the gold price, the most important is the perception of the maintenance of the investor's perception, the maintenance of purchasing power of the US dollar, particularly relative to the interest rate. If you're getting paid 4.5 in the US 10-year treasury, and you believe that and you don't need the John Williams number. You don't need a number that high. If you believe that the value of the U.S. dollar is deteriorating at 7.5, then you aren't making 4.5. You're losing 3%.
Yeah.
That's fairly troubling to savers. I don't think. Well, no, I should back that up. There are a lot of people who actually believe that that blue line represents reality. There are a lot of people who believe that the deterioration in the purchasing power of the US dollar is measured by the CPI. I don't think there's anybody who actually looks at the CPI who believes that. But gold, I think, is telling you that the purchasing power of the US dollar relative to the interest rate on the US Treasury is disturbing for people. So I guess that's the reaction I would have to that chart.
Okay, so basically, if reality is somewhere between the red and the blue line, then we'll call it at, I don't know, 6 or something. We're losing money by investing in what's considered the benchmark of the cost of money, the 10-year treasury.
Absolutely. I would ask people listening to this podcast to look at the best goods and services that they consume. Going back to, say, 2020, look at their rent or their mortgage payment, look at their gasoline prices, look at their groceries, look at their health insurance costs, and try to defend the assertion made by the CPI that US inflation is only 2.5 or 2.6%. That's absolutely positively silly. Remember, too, Steve, that the CPI doesn't include tax, which is the largest single household expense for most Americans. The CPI is a factoid, and I think the gold price is addressing it. I'm delighted that you had John Williams on because he makes a studied case for measuring the deteriorating purchasing power of the US dollar in the same way that it was measured in the 50s and 60s and 70s, as an example, non-hedonistically adjusted. He is very funny when he talks about the fact that the values expressed by the CPI are often values that have been manufactured by the same people who set up the index. That's a very useful service, and he doesn't get a big enough audience.
Yeah, yeah. There's another one that I was able to do it with, and we didn't get quite the history here. So the yellow now is the 30-year treasury yield, and the blue is still the CPI, and the red is shadow stats. So
Yeah, well, this tells you something different. The 10-year yield is easier for the Fed to manipulate by manipulating the short-term interest rate. You see that spike in the 30-year yield. That tells you that real bond investors, the bond vigilantes, don't believe the CPI number. The 30-year Treasury is the riskless security. If you happen, as an example, to run a university endowment or an insurer or something like that, where you absolutely positively have to maintain the purchasing power of your capital over a very long period of time. If you look at the far right part of the yellow line, you will see that the government has begun to lose control of the long end of the yield curve.
Yeah.
That's a very, very, very telling chart.
Okay. All right. Thank you, Joan, for doing that. I couldn't figure out how to do it, but she did. So that was great. A lot of smart people in the real classroom. Okay. Getting into some of the company questions. So Rahal out of Singapore is curious on any favorite zinc plays that you have. Are there any plays that you like that revolve around zinc?
There are not. There are several companies who are important to zinc where zinc isn't particularly important to them. One would look at Tech Corp in Canada as an example, but in particular, copper is also important to zinc. So in terms of pure play or semi-pure play zinc stocks, I don't have any.
Okay. He's also asking about a time frame that we should have for U.S. and Canadian oil investments. He says from an investor standpoint, not a speculator standpoint.
I suspect an investor will feel better about U.S. and Canadian oil and gas stocks in 2 years, but I'm 72 years of age. I would suggest that I will own my Canadian oil and gas stocks, my U.S. oil and gas stocks too, for at least 10 years. I regard them as almost part of my investment principle now. The oil and gas business is a good business. It is fundamentally undervalued. Those companies are generating an awful lot of cash. And thus far, the best companies are reinvesting enough of that cash to maintain their sustaining capital investments and then being fairly generous about returning the surplus to owners. A nice place to be.
Okay. Richard is asking, would appreciate comments on TMQ. Long ago, Rick endorsed, then Biden stopped the Ambler Road. Haven't heard comments since Trump back in office if he reversed Biden.
I would probably wait until a decision was announced and pay up. I'm very, very, very fond of those deposits. It's important to note that that isn't a single deposit. It's a district. I'm fond of the grade. I'm, at least in a historical sense, fond of the job that the management team has done with the tribal corporations and the indigenous people. Of course, Mr. Biden blocked consideration of the industrial road, which would have benefited the tribal corporation. But I'm not long past, but I am past the idea that I'm going to speculate on my own ability to read the political tea leaves. I'm lousy at it. If the road got approved and the stock doubled, it might be that the stock was worth more after a double for the certainty around the regulatory framework than before. I'm very, very, very happy to speculate on circumstances where I believe I have a better ability than my peers to understand information and do sort of risk reward calculations. With regards to my own ability to do political forecasting, I'm afraid my track record is unblemished by success. So I don't have enough confidence in my ability to do that kind of speculation.
Okay. You'd rather wait for the certainty of whether the road's going through or not and then pay up for it. Okay.
Yep.
All right. He's also asking about Trilogy Metals.
Trilogy is the company I thought he was referring to in the first question.
Oh,
Trilogy,
you know what? That must be it.
Trilogy is
Yeah.
certainly the question I was answering.
Okay, yeah, you're right. He put that there for my benefit because I didn't know the ticker. All right. Tybor is saying, good afternoon, gentlemen. What is Rick's opinion on Paladin Energy?
I'm a Paladin shareholder. I'm a little concerned about recent revisions to their feasibility study. I'm attracted to their assets. I'm attracted to their ability to utilize term contracts to finance more than one asset to production. I believe if Paladin can pull off its business plan, and that's an if. I'm not saying when, I'm saying if they can pull off their business plan, if they can develop at least 2 deposits and perhaps 3, utilizing financing obtained as a consequence of term sales of uranium, that Paladin will be a must-own for a major mining company. It will be a standalone uranium division with very forecastable prices, volumes, and cash flow.
Okay. And Han wants to know, hi, Rick, could you please comment on Energy Fuels and Encore Energy? What ranking do you give?
I don't have a ranking on Encore. I increased my ranking on Energy Fuels from a 6 to a 5. I had revised it from 5 to a 6 because of share price increases. The recent news around Energy Fuels' ability to, at least on a bench scale, process heavy rare earths and deal with the nuclide waste in their permitted disposal facilities tells me in the current climate in the United States, where this administration is prepared to subsidize both rare earths and uranium, that Energy Fuels is in a relatively unique position to obtain, which by the way I oppose, below market financing to advance both of their businesses. I think it's highly likely that where 5 or 6 years ago, Energy Fuels would have been vilified for their attempts to mine uranium and vanadium, particularly in the Colorado Plateau, that ironically 6 years later they're going to be subsidized for the same activity. While I don't applaud subsidies, obviously it's in the company's interest, pardon me, to be subsidized as opposed to vilified, and that's the unique position that they're in.
Okay, so when you said below market financing, you meant subsidized.
Yep.
Okay, all right.
Yep.
And Encore?
I have no ranking.
Okay. And Jason Jessup. Okay, so Daniel wants to know Rick's opinion on Magna Mining and Azimut Resources.
Magna, I've been on the bid for. I like the exploration results that they are generating in Sudbury. I like the fact that they have adult supervision behind the scenes in Dundee. Not necessarily that they need adult supervision, but I like the fact that there's a big shareholder who is technically sophisticated, who is watching their every move and supporting them along the way. I love the idea of consolidating Sudbury. It's an absolutely unique district that's generated a lot of wealth, including some for me. So I'm a current buyer of Magna Mining. I'm sorry, what was the other name?
Azimut Resources.
I'm an Azimut shareholder, but I need to say this is more of an exploration stage stock. They're a prospect generator in Quebec, fairly well backed by the province of Quebec. Small company, have not yet enjoyed any major exploration success. But I think we're coming into the part of the cycle where mining companies, big and small, need to beef up their property pipeline. When that happens, the prospect generators absolutely prosper. I'm sure that Azimut, Monsieur Lalin, has a whole back pocket full of ideas, some staked, some unstaked, that he hasn't been able to sell. And I have a high degree of confidence that in the next 2 or 3 years, all of those properties will be enjoying work funded by third parties. And that's what prospect generation is all about.
Okay. How about now? I interviewed Jason out at CEO of Magna Mining out at your symposium, and one thing that he was mentioning is that they don't have to build a mill or anything. They're basically taking this rock and then putting it over to a mill next door, and they're doing it for them. So he in his words, he said this was the simplest mining operation he's ever dealt with.
That's a really important note. The Sudbury is full of processing facilities, not merely mills, but also smelters. The charge that you have to pay, the transportation charge for sending the mill concentrate to a smelter, isn't one where you take it to a port, load it on a freighter, ship it to a foreign country. It's one where you truck it, 30 or 40 kilometers down the road. It's also useful mining in a community that's full of miners. When you go for spare parts in Sudbury, you go to Sudbury. When you go for spare parts in some other kind of part of Canada, you may go to Sudbury. I think the third thing that's important to understand, and Amar Al-Jundi, the CEO of Agnico Eagle, at our conference, really set me up on this. He said it's important to note in an infrastructure-rich area that a deposit doesn't have to be large enough to amortize its own mill. So while I used to look at gold deposits in the Canadian Shield that were 500,000 or 600,000 ounce deposits, I wouldn't buy them because in my own mind, trying to construct a financial model where that 600,000 ounces generated enough margin to amortize the front end capital cost around the processing facility and leave me a reasonable rate of return. What was pointed out to me is that in an infrastructure-rich environment, that you don't have to do that. You have to mine the material and you have to ship it to a mill, which is often willing and able to process that material on extremely attractive terms because the mill itself doesn't have enough rock to run at optimal capacity. That was an important realization. And I think one that is maybe central to the thesis around Magna.
Yeah. Okay. All right. Less cost there. Diane wants to know, appreciate your comments. Thank you for being here, Diane. She's asking about Coupa, C-U-P-A, Coupani on the Toronto Stock Exchange.
Do not know it.
Okay. Daniel wants to know Rick's rankings on Surge Copper and Rio 2.
Rio 2, as I have as a 5, Surge is unrated.
Okay. All right. And guys, we're pulling the questions here from Rule Classroom Plus students. So if you're watching on YouTube or X or any other outlet, head over using the links down below or go to the ruleclassroom.com. Han wants to know, hi, Rick, could you please comment on Minera Alamos' huge stock price drop because of buying the Equinox asset? Are you a buyer? What ranking do you currently give Minera Alamos?
I'm not a buyer of Minera Alamos. They had a very clearly enunciated strategy, which said that they wouldn't dilute because they would put their existing asset in production, then grow via free cash flow. The idea that the management team changed in mid-cycle and bought these assets, I think angered some people. Time will tell whether or not the strategy is valid. What I personally objected to at Minera Alamos is it looked like it was going to be, for some period of time, a collection of lower grade tier 2 assets. I myself prefer higher quality assets, or at least a target for higher quality assets. What Minera Alamos is doing is really time honored in the mining business, which is to say that you amalgamate poorer quality assets, hoping that you can improve those assets while at the same time benefiting from size and scale, increasing your liquidity, increasing the share price, lowering your cost of capital. And over time, as you have the ability using that capital to buy better assets while selling your lower quality assets. That's precisely what Equinox is doing. So I understand what he's doing. It's just a technique that if it isn't carried out by somebody like a Ross Beatty, carries real risks, and I chose not to avail myself of those risks.
As you were describing that, I was going to say, it sounds like you're talking Ross Beatty's playbook here. Alan wants to know, Rick, are there any significant unanswered questions for Bellevue Gold? Thank you.
I think the unanswered questions will have to do with the reconciling of the feasibility study with production. That mine needs to shake in. There are certainly unanswered questions looking out as to how big that deposit can get. In traditional Australian fashion, they did enough drilling, enough exploration, so that they understood the deposit well enough to put it in production. There was no intention among this or the prior operator to emulate the North American idea, which is to say you see how big it is right away. And so I would suggest that those are the two questions. For the record, I'm long Bellevue.
Okay. Daniel wants to know your opinion on Sandridge Energy.
Don't have an opinion on Sandridge.
Okay. This one I know you do. Daryl wants to know your thoughts and ranking of Cameco.
I am long Cameco, in fact, way long Cameco. It's the only uranium stock that I didn't do any selling on when they emerged from the hated status to the tolerated status. My reticence about Cameco a year ago had everything to do with their acquisition of Westinghouse, an engineering company. And my question as to whether some guys who were pretty good uranium miners knew anything about engineering. The last couple of quarters, the operating numbers would suggest that either they know something about engineering, or at the very least, they're leaving those guys alone. There's a lot of room in Cameco too for their older fixed price contracts to wear off. I note that in the last quarter, if my memory serves me correctly, in a $67 or $68 market, they were selling uranium at $59 a pound. The new term contracts that are being signed, where they're being signed, are in the high 70s or low 80s. And certainly the spot market is higher than 59 bucks. So I think there's a fair bit of near-term pricing flexibility in Cameco. But the real excitement for me in the longer term is integrating Westinghouse into the Cameco business. I mean, Cameco is looking to service all sides of the uranium business, from mining it to reprocessing it to supplying nuclear fuel to building nuclear power plants on a fixed price basis and to operating nuclear power plants, which is to say merely than simply mine uranium. They're looking ultimately to sell finished watts.
Yeah. They're going from just selling U3O8 to selling electrons. That
Right.
is pretty cool. Hagen, remember him from the symposium? Good to see you, sir. I'm curious what issues Rick sees with Northisle copper and gold, and as a contrarian, does Rick see VALE as an unloved giant with potential?
I don't see in Northisle enough data to convince me that it's anything like a tier 1 deposit. That's my objection to it. I really like the people. I hold them in extremely high regard. And if I could get past my prejudice against tier 2 deposits, I would probably own the stock simply because of my fondness for the people. I own a little bit of VALE. I sold it until I was able to see what damage they would face as a company from the tailings disaster that occurred in Brazil, that they were, of course, a major part of, which killed 51 people. The ruling now has been obtained both in civil courts and in the criminal courts of Brazil, and so we know something about the downside that they face. The iron markets continue to be strong, and it wouldn't surprise me if in the near term I was punished for coming back into VALE. But if you look at what is the reasonable net present value of the cash flow that they will enjoy from the deposits that they have relative to the price of the company, this is certainly one where the value of the sum of the parts exceeds the price for the whole.
Okay. Okay. Northisle, I interviewed Sam Lee at the VRIC at the beginning of the year, and he just seemed like a kind of a poster child of what a CEO should be. Um, Very personable, knew the project in and out,
Yep.
very professional. Um, yeah, I like him a lot. Um, okay, Martin wants to know, I've invested in Meteoric, Bravo, and Centaurus, all in Brazil. Does Rick foresee any problems developing these mines given the political climate in Brazil?
I'm reasonably confident as one could be about the national politics in Brazil. Corruption being a given. The local politics in Minas Gerais are going to be a little tougher. These are all three deposits that look to me like world-class deposits. And in every case, my suspicion is that the local communities are going to want to grab as much of the pie as they possibly can. These are problems that will be resolved over time, but the market hates the phrase over time. The near-term uncertainties, as an example, the community questions and objections to Meteoric are just an example of the sort of volatility, Steve, that we had talked about. The reason why tier one deposits with uncertain production dates scare people so much is that they have to participate in 3-month waits or 6-month waits around issues like community approval. They torture you. They absolutely positively torture you. And if I hadn't had so many cases in my 50 years in markets of hanging on and experiencing 10 to 1 gains, 20 to 1 gains, I probably couldn't stand to subject myself to the torture involved in wading through uncertainty to get to those gains. And these are all three companies that will absolutely torture you between now and the time when they do or they don't pay you off.
Okay. Okay.
By the
So,
way, if the questioner lives in the United States and Canada, they need to consider the long-term political risk in these jurisdictions too.
yeah, Centaurus just did a successful raise, right? And they're
Correct.
okay. Yeah, I noticed their stock price had a quick blip, and then that was it. And so that was
I
kind
suspect we're to blame for the quick blip. Centaurus always does fairly well at our seminar. Our attendees are well enough schooled that they understand the difference between the share price and the net present value of the deposits, even 5 years out, and that sort of value is the sort of thing that attracts the attention of 2,000 paying customers at our seminar. We've always at our seminar asked the attendees to understand that the furor engendered by the seminar subsides in 6 weeks. So don't compete against each other. Use good till cancel limit orders. Absolutely use the information that you got at the seminar, but there's no sense jamming a stock immediately after the seminar and then realizing 2 months, 3 months later that you could have acquired the stock with the same knowledge more cheaply.
yeah, yeah. Okay, David wants to know. Rick mentioned Amarc resources a while back. Can he comment on it and give your latest rating?
Latest rating on Amarc is a 4. Um, that is an interesting discovery, and it's an interesting discovery behind a team. There, for those people who don't know Amarc, they are exploring for, with other people's money, large copper gold porphyries in British Columbia. There are a lot of people doing that. What's important about Amarc is that the team behind it, Hunter and Dickinson, has been successful at precisely the same endeavor 3 or 4 times in the past. Bob Dickinson is of my vintage, which is to say he's a little long of tooth, but he is ably helped by Diane Nicholson, who has worked with Bob for probably 30 years and is probably 25 years his junior. I'm attracted to Amarc, and I have it as a 4. There are not many of the current crop of BC porphyries that I think threaten to be tier 1 mines, and this is one that, the data is by no means certain, but this is one that has the early hallmarks of an important discovery, and importantly, an important discovery by people who understand what that looks like.
Okay. Han wants to know, hi Rick, could you please comment on New Pacific Metals silver project in Bolivia and Silvercorp metals? What ranking do you give?
Those are interesting questions. I I am very, very, very fond of Roy Feng, who is the CEO of Silvercorp and the controlling shareholder in New Pacific. Silvercorp, I have as a 5. If I had more confidence in the opacity of the financial reports that they are able to generate from China, and more confidence in the reserve reports around China, I would probably raise that ranking. That has been a very good stock to me. When they took Silvercorp public, God knows how many years ago, I led the financing at 35 cents with a full warrant, watched it go over 10 years to $15. It was a wonderful, wonderful, wonderful experience. You know, a 25-cent warrant in a $3 bid market is about as much fun as one can have, and Roy showed me that. New Pacific is a very, very promising deposit in a hard country. Um, and it is a deposit that I would suggest has uh, potential metallurgical challenges that I don't pretend to understand. Roy is very good at systematically answering unanswered questions. I have a lot of time for the guy. So although I don't own New Pacific, I do own Silvercorp. I own it in a very de-risked fashion, which is to say, I've sold enough of the position that never mind, I've taken my initial capital out. I've taken 3 or 4 times my initial capital out, and I don't know this for sure, but I wouldn't be surprised if my current dividend from Silvercorp exceeds my purchase price. Treated me very, very, very well, albeit I've held it for a very long time.
Yeah. That's what we call a first world problem.
It is.
Okay, Patrick wants to know, hi Rick, curious if you have any comments or ranking on Aker BP, fairly nice oil discovery of 100 to 130 million barrels in the North Sea, announced today.
I didn't see the announcement. I was an Aker shareholder after Lundin was sold to Aker. I collared my purchase and sold it. So I no longer own Aker, and as a consequence, I don't have a ranking on it. I would note that, depending on the infrastructure associated with that discovery, it may or may not be important. If at 100 million barrels, it's satellite to existing infrastructure, that can be hugely, hugely, hugely profitable. If the infrastructure needs to be built, or if it's more distal to infrastructure, it could be less important. But I have to say, I'm not familiar with the discovery that was announced, so I can't comment on it beyond that.
Okay. Luce, what's up, Luce? She says, hi, Stephen Rick. Is there any update on the course for valuation of natural resource companies?
I had to put this in context. There has been a lot of discussion at the Rural Classroom about doing a real hands-on course on how to do valuation for natural resource companies. It's a course where I could probably teach 50% of it, but that leaves 50% of it untaught. And I was trying to put together a course, and I remembered in 1996 doing a distance learning project called the Mining Investment College with the Colorado School of Mines. The consequence of that is that I approached the Colorado School of Mines about joint venturing a valuation course using their professors and a few outside people that would be produced by the Colorado School of Mines and the Rural Classroom. I'm delighted to say we've had a couple really good meetings with the Colorado School of Mines, and we're trying to put together a how would you say, a reading list for the course ahead of time,
Oh,
and a course outline. The idea right now is that it'll take place on the campus of the Colorado School of Mines in Golden, Colorado. It'll be a 4-day course, 8 hours a day for 4 days. So it's going to be a bitch. Not a course for tourists.
okay.
It will also be available online via live stream. They have great recording facilities at the Colorado School of Mines, and they have a great team, a great young team. It will likely be expensive, somewhere in the $2,000 to $2,500 range. And what we likely will do is we will likely post a synopsis of the course at the Rural Classroom, and see how many refundable deposits we attract. It will be an expensive course to put on. And if there isn't sufficient interest, I don't want to waste the time or the resources of the Colorado School of Mines or my own resources. I should note right here for people who are excited about this, this is going to be very hard work. This is going to require at least 30 classroom hours. And I suspect that most of the attendees, if they aren't, mining engineers or CFOs or something like that, most people who come to the course who are not from the industry are going to have to repeat the course material 2 or 3 times, which is to say you're going to have to play the tapes. This is not, as I've so often said about my own conference, this is not people who buy the Sunday paper for the crosswords and the funny pages. But for those who are serious about being natural resource investors and speculators, the whole drill begins with valuation, and that's what this will be about. Our idea at present, and the idea may change, is to accept 4 public companies as sponsors of the course and to do valuation exercises on all 4 of them using the lessons that you will be taught over the 4 days. In other words, bring the information around the companies and the company's executives to Golden and use the lessons in real time to construct valuation models of the sponsors who will either be beneficiaries or victims of the outcome.
I'll fly out there right now for that. That would be amazing. I'd love to do that.
Golden's a great town. For those who don't know it, it's the home of Coors beer. If you're 21, you can get a wonderful tour of the brewery, and that includes a couple of the products that they make for their own consumption and don't sell, which is fun. Hanging around the Colorado School of Mines with all those bright kids is a lot of fun. And for those of you, by the way, who think that university professors are a uniformly boring lot, what I learned doing the mining investment college with the Colorado School of Mines is that these guys are natural hams for an audience. That part of it will be a lot more fun than you ever imagined.
Awesome. Oh, we had a little discussion. I don't know if you saw it or not in the real classroom of the thing you were talking about putting together a tour down in either Argentina or up in British Columbia of a mine.
Yep.
And it looks like, at least from the preliminary vote, maybe we can do an official one. Looks like Argentina is winning. Just for everyone to
That's
know.
really good because Argentina will be easier.
Okay.
Argentina has much better infrastructure. We could, as an example, stay at Cafayate or in Salta and go up to the so-called lithium triangle. We could likely go down to San Juan or maybe even Mendoza. In other words, there's things in northern Argentina like hotels and roads that are really useful for something like this. Northwestern British Columbia would show us some absolutely spectacular mines, but let's just say that the accommodation would be Spartan.
Camping. Camping. Yeah, it won't be cheap though, right? It'll probably be north of 12, 14 grand, something like that.
It will not be cheap, and we would likely coordinate this trip with a little fun. It's likely if we do it that we will do it with opportunity travel Barb, Michelle, and Jamie, who put on the physical aspects of our conference. They do a wonderful job organizing investor tours around the world. Their tours are top drawer. And so people who go on this should know the good news is it won't all be me lugging you up a side hill and down a hole and getting you dirty and wet and getting your forehead banged up. It will be some fun. It will not be cheap.
Okay. All right, getting close here. Bo wants to know, do you think Thesis Gold, the Lawyer's Ranch project, will be a takeover target?
Could be is the answer to that. Uh, some good exploration results, some sketchy results. There's better infrastructure in the region than people believe, which leads me to believe that this thing may get built. Whether or not it gets built by Thesis or somebody else is a different question. I don't own it, for the record.
Okay. Luce says, what is shadows? Oh, if you go onto my channel, Luce, and look up, just look up John Williams, and we talk about it a whole hour. He's basically saying that the CPI is not to be trusted, and he uses metrics from back in the 1980s. So that's ShadowStat. David wants to know, could Rick give his latest comments and ranking on two Aussie gold stocks I'm watching, Ramelius and Regis Resources?
Ramelius, I do not own. Very good grades, very good people. I don't own it because there's only so many stocks you can own. I've never found the correct entry on Ramelius. Regis, I was a huge beneficiary of. That's a stock from my past that I just can't help but smile when I think about it. I'm no longer a Regis shareholder because they gave me everything I wanted and more. The team that built the original Regis is now the team behind Emerald, which was an exhibitor at the conference and a company that I'm hoping will repeat the performance that they engineered at Regis, which was truly mind-boggling performance.
Okay, we got a few more people here, and we're pulling the questions from the Rule Classroom Plus students. So if you're watching on any other outlet, follow the links down below or go to ruleclassroom.com. And let's see if we can get some people that haven't asked yet. Thomas. Hi, Rick and Steve. Love the work you do. Many thanks for that. Thank you. I realize that I am a little late to the uranium space. I've been concentrating on precious metals and oil and gas until now. I'm looking to capture the beta from the uranium market. I'm looking closely at Cameco, Uranium Energy Corporation, and Uranium Royalty Corporation. And am I in the right area?
If you're looking for beta, I would confine the search to Cameco. Both UEC and UROY, UEC in particular, are probably more a bet on US politics and US regulation. That's a company that's been built extremely carefully, but it's all around leverage to the US uranium business. UROY, Uranium Royalty, is a company with a better relationship between price to book and also has a more diversified uranium base, but it's a much smaller company. If you're looking to capture beta, the names that you can look at are Cameco, Cameco, and Cameco.
Okay. Let's see. Josh hasn't asked one. Josh, hi, Rick. Would like your thoughts on Emerald Resources.
I think I just answered that in terms of Regis. Emerald is the Australian listed company, which was an exhibitor at the Natural Resources Investment Symposium. It's run by the people who built the original Regis. Very, very, very high quality people. I have some concern right now that they're going to grow from one mine to three mines without bankable feasibility studies. They make the point that they can build these with the cash on hand and the cash flow from Cambodia. I'm always concerned personally about production decisions that occur without third-party verification. So, and by the way, I'm not merely long Emerald. I'm way long Emerald. But that is a real concern for me. And people who buy the stock need to watch the construction process very, very carefully.
Okay. Vito wants to know, I haven't heard of this one. Do you have any opinion on Mogotes metals?
Don't know enough to comment.
Okay. Doug wants to know what Rick thinks of Perseus mining.
I am a Perseus shareholder. I've sold enough that I no longer have any net cost in Perseus. Perseus is a West African operator, and they are not an operator that is in the lowest cost quartile worldwide. They are a pretty experienced West African operator, and they are an operator where on the metric net present value of future cash flows relative to enterprise value ranks very well on the global mining scale. There is political risk, there is social risk, and there is the risk that they're in the mid tier in terms of cash costs.
Okay. Antia is asking, what's your opinion? I didn't hear about this. The opinion of the halt in trading of Meteoric resource shares?
That was as a consequence of a very odd municipal decision where a municipal council voted in favor of one of Meteoric's applications, but one of the council people objected. And the consequence of that was that discussion was tabled, which is to say that there is problems at the local level in the community consultation, which is frankly something that you expect at this level.
Okay.
Earlier in this interview, for those of you who didn't hear, I said that the whole process of owning potential tier one deposits that are 5 or 6 years away from a production decision is that you endure a lot of this. We are now in Meteoric and the other ones I like in the really boring part of the Lassonde curve. What I have found is if I'm not willing to endure the boring part of the Lassonde curve, that I turn a 20 bagger into a 12 bagger. The consequence of that is that when I'm dealing with a tier one deposit, I like to be way early and I like to be way long. What that means is sometimes I end up with way too much egg on my face, but I'm willing to do that.
Yeah, you can get them real cheap too. If you're good till cancel limit order, just
Yep.
find the cheapest price that goes back a couple of years and it usually hits again. Okay, wrapping up here, Vito, do you feel the timing for the third gold boot camp, get ready to insert a commercial, will be early enough to buy respective equities with the gained knowledge, as gold stocks have been going up nicely already?
It is because the third boot camp, we're moving down the ladder. We are now in the gold bull market at the point where leadership has moved firmly from bullion to the best of the best. The best of the rest are moving, but in terms of the bottom part of the quality ladder, the single asset producers, the developers, and in particular the explorers, the money's not there yet. I'm delighted by the timing of the third boot camp. I'd love to say that this is a result of careful planning on the part of Albert and myself. In truth, this is just ridiculous luck. Remember
Sometimes better
that
lucky than good.
remember that if you come to the boot camp and pay us a tuition and you disagree, that there's an absolute solid gold money back guarantee.
Awesome. Well, thank you very much, Rick. Do you have any final thoughts?
I don't. I would just ask people to use the facilities at the Rule Classroom, in particular, the Introduction to Natural Resource series. The questions that were asked today, many of them could have been answered by people who read that material, or at the very least, the people who read that material then would have had the ability to assess my answers. The fact that I like something, Steve, as you well know, is no guarantee that it goes up. So it's important that people have the ability to ask and answer the questions on their own so that they can put my conclusions in context. If you understand the reason that you own a stock, the perturbations in the share price, the ebb and flow of news, as an example, Meteoric's community news today, won't trouble you as much, and you'll be able to hold the stock. Similarly, if a circumstance that I didn't know about at the time I made a contact comes up 90 days from now, remember that my comments aren't evergreen. It's important that you have your own base of knowledge. It's important that you have your own methodology for valuation. It's important that you have the courage of your own convictions to speculate in a class as risky and volatile, different words, as mining.
Okay. Yes, join us in the classroom. It's free. That's my favorite price. And then if you want to be a little more serious, then the Rule Classroom Plus, and you can try that one out 2 months for free as well. So they all come back with, I love it. I love being a part of this. Rick, thank you very much.
A pleasure. Thank you.
And thank you all for being here. We will catch you next week, same bat time, same bat channel, August 28th at 12:30 Pacific time. Until then, we will see you there.